At first glance, things seem to be really looking up for India's very own budget friendly hotel chain, Oyo. It's had some pretty big wins in the last few months. At its town hall just this month, Oyo founder and everyone's favorite Shark Tank judge, Ritesh Agarwal, proudly declared that it had officially become the country's most profitable startup this year. After a tough couple years, courtesy the pandemic, ballooning losses, and some pretty brutal layoffs, not only did it manage to clock its maiden profitable year in FY24, its profits surged by more than 170% to touch well over 600 crore rupees the following financial year. The company also managed to land a pretty significant legal win recently. After years of back and forth, the Delhi High Court finally ruled in its favor in its long standing dispute with Zostel Hospitality over a failed acquisition. If I believed in luck, I would say it's currently on Oyo's side. So, why then is its eventual IPO still the subject of such widespread speculation? My colleague Seetharaman ji put it quite well in the latest edition of his newsletter on the Indian stock market, Long and Short. He said, and I quote, "Few companies are as good as Oyo Hotels at not going public." Its listing has been a few years in the making. It first filed in 2021, then again in 2023, and then it was just about to give the share sale another shot when its largest shareholder, Softbank, threw a spanner in the works. Bloomberg reported that Softbank urged Oyo to hold off until its earnings were even stronger. So now the goal is apparently to try and list as early as March 2026 at a valuation of more than $7 billion. Interestingly, when it was looking to list back in 2021, it was hoping for a valuation of 12 billion. But now things are different. Between the delayed IPO, top-notch rivals, and demanding investors, things are about to get much harder for Oyo. Welcome to Daybreak, a business podcast from the Ken. I'm your host Rahel Philippos, and I don't chase the news cycle. Instead, every day of the week, my colleague Snigdha Sharma and I will come to you with one business story that is worth understanding and worth your time. Today is Monday, the 19th of May. Okay, forget the numbers for a moment. If there's one thing tech companies have learned in the last few years, it's that public market investors are a lot less credulous than VCs. There's no better example of this in action than Ola Electric. The company listed back in August and shares doubled within a week, largely thanks to the powerful story its controversial CEO Bhavesh Agarwal was able to weave around the brand being rooted in India. But cut to now, and Ola has lost its leadership in electric two-wheelers and is now facing flack over the mismatch between its own sale numbers and the government's vehicle registration data. No wonder SoftBank's founder and CEO, Masayoshi-san, isn't particularly chuffed about Ritesh's rush to get listed. Bottom line is, the public market investor is discerning, and a solid story will only take you so far. The problem for Oyo now is not when to take it public, but what exactly will be taken public. By now, we're all quite well acquainted with the Oyo business model. It doesn't own its properties. Instead, it provides capital and training to hotel owners across the country to provide a standardized budget hotel experience. In exchange, they get a franchisee fee. But Oyo has not been able to pull off what its biggest competitors like Marriott or Hilton have. Those chains dictate everything from the location of the hotel to its design to pricing to the standard operating procedures for everything. Things like guest service, hotel maintenance, all of it. It's their brand that is at stake after all. Meanwhile, Oyo gives small hotels software for inventory management and digital check-ins. In fact, back in 2021, in its IPO papers, it claimed to assess hotels every month for compliance with its standard operating procedures. Now, that doesn't quite compare to the arrangements and the protocols that large hotel brands have in place with its own operator network. That's why Oyo's rapid growth, how it expanded from under 13,000 to over 18,000 hotels in FY24, should not exactly inspire awe. Having said that, Oyo's attempts to turn things around in the last few years is pretty evident. We discussed how it managed to swing to profits in FY24, but that came at the cost of not adding to its revenue. In fact, in the 2 years leading to FY24, Oyo's parents' revenue rose a mere 13% to 5,540 crore rupees. Compare that to the Tata Group's Indian hotel company, which more than doubled its revenue in the same period to almost 6,800 crore rupees. It also managed to make a lot of money in the process. Its profits in FY24 were more than 4 times what was reported pre-COVID. So, what will Ritesh's pitch be when Oyo does eventually go public? Because those looking to bet on a no-frills hotel operator typically gravitate towards Lemon Tree Hotel. Even a company with a mere 11 hotels in 3 cities, Blackstone-backed Ventive Hospitality, has found favor among investors with its industry-leading revenue per available room. ITC Hotels and EIH, which run the Oberoi and Trident chains, had their fans too. What's common to all these companies is how simple their business models are. Meanwhile, Oyo continues to brag about empowering thousands of small hotels with its two-sided technology platform, whatever that means. Now, the other reason for the delay in Oyo's plans of going public could be because of the $2.2 billion loan Ritesh took back in 2019. The loan was provided by a consortium of Japanese banks led by Mizuho and Nomura with a guarantee from Sun to increase his ownership in Oyo. Reports suggest that the repayment timeline of the loan, which was restructured in 2022, is tied to Oyo's listing. While the transaction has little to do with Oyo's business, the idea of its CEO repaying a loan backed by the CEO of its largest shareholder is sure to turn away those investors on the fence.
Daybreak is produced from the newsroom of The Ken, India's first subscriber-focused business news platform. What you're listening to is just a small sample of our subscriber-only offerings. A full subscription unlocks daily long-form feature stories, newsletters, and podcast extras. Head to theken.com and click on the red subscribe button on the top of the website. Today's episode was hosted by Rahil Philippos, produced by me, Snigdha Sharma, and edited by Rajiv CN.